It was supposed to be the first tech IPO of the year, but just one day before it went public, AppDynamics decided the better move would be to sell. Cisco Systems stepped up and paid $3.7 billion for the startup. Joining us now to discuss this is Roger CHENG, executive editor at CNET. Roger, thanks for joining us here. Let's just get right into this. What is AppDynamics? I think everyone's heard of Cisco, but not AppDynamics.
Right. Well, AppDynamics it basically develops software that helps large companies manage their apps, manage the applications that run their businesses. So it basically is a bug zapper for a lot of these big companies who use increasingly complex software to run their businesses.
And so why would Cisco want to buy them?
Well, Cisco is long known for making routers and switches. That business is starting to mature a little bit. People are getting away from those traditional physical switches. And so, Cisco is trying to transform itself. It's focusing more on software, on security, and Internet of Things. So AppDynamics is definitely an area where Cisco can branch out to a hotter, faster growing segment.
But the company's so much smaller. When you look at the revenues of AppDynamics versus the revenues of Cisco, is this thing even going to move the needle at all?
No, not in the near term. I mean, if you look at the revenue, it's around $150 million for the first 9 months of 2016. And it lost money. It lost about $100 million last year. You look at Cisco, which had fiscal 2016 revenue of nearly $50 billion. This is not going to move the needle at all. Again, this is more of a strategic push. This is a big acquisition, the biggest acquisition for CEO Chuck Robbins, and sort of an indicator of where Cisco wants to go in the future.
So if we look at where they want to go in the future, but based on what they've done in the past, how does this fit in with some of their other acquisitions, good or bad, or in the middle, or maybe still too early to be called?
I mean, it's too early to be called about AppDynamics. Obviously, it was a hot company on the verge of an IPO, as you said. But, I mean, I'm a little wary of these strategic shifts. I mean, Cisco famously tried to get into the consumer market under John Chambers many, many years ago with the flip cam and with a number of other acquisitions. That turned out to be terrible. It was a big distraction for the company and set them back a couple of years. So I'm a little wary when these large companies, these big companies, try to make these huge shifts in another direction, get out of their core business.
And then, interestingly enough, they got sold privately, let's say, not in the public markets, a day before their IPO. That's a big trend, right? We are seeing a world now where IPOs are not really happening and everything's happening through M&A. What does that tell you about the state of the market? There's just so much cash out there.
Well, I think what it is a lot of these investors want the cash in hand, right? I mean, Cisco is offering a premium to what the IPO is valued around. It would be around $2 billion, so it's $3.7 billion. If I'm an investor, I'm taking the cash now rather than wait for that upside.
Well, there you have it. We're going to have to see what happens. Cisco, AppDynamics, an interesting merger to say the least. Roger CHENG from CNET, thank you for joining us. And thanks for watching. I'm Eric Chemi. Have a great day.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.